Good afternoon, everybody. Nice to be here in London. Nordic Gold, it's a very interesting project. We took control of it on the 2nd of July this year. We look at most probably 1,000 projects a year, looking for things of value. As our shareholders like money and we like money, we're here to make a dollar. So looking at Nordic Gold, it's obviously in Finland. We're changing the name of the mine to Otso, which is the mythical bear. And so Nordic will disappear next month. And the mine is a fully built, fully licensed mine in Finland, which is a very nice jurisdiction to mine in. You can read that in your own time for the lawyers write up. Okay, so this is a significant production access. So we took over on the 2nd of July, as I said. So we've got a 2 million tonne plant, Rolls-Royce plant. They spent 300 million euros building the mine, so very sophisticated, built by Metso Minerals. And that's what led to the demise of the project, because they spent so much capital on the development. Like we see there's a lot of mines in Australia today that suffer from the same thing. By the time they get to production, the debt just kills them. So Nordic Gold took it over, started taking over in 2015, backed by Pandion Mine Finance, and moved it back to production last year in November. But they weren't really miners. They never had the experience, and they didn't do the work. Again, pushed mostly by the need to pay back the debt they took on. So we came in, and obviously we've been busy cleaning up the project. It took us 3 months to finalise a deal with Pandion. So we had a 60 million mark-to-market debt, 63.4 million gold loan. So that's gone now. So we owe them 23 vanilla debt. Well, not even debt. We pay them 11.5 million in 18 months, and then another 11.5, 18 months after that. So that gives us the runway to get this mine back up and running. Obviously, we're working well with Pandion. They put another 5 million in, covered all the creditors, and they've put another 1 million in working capital. So at the moment, the mines, we've got 16 people on site, and it's production ready. When they tried to restart the mine, they brought in all the first fills. And so the mine is virtually, we've got cyanide, lime, and all our permits. So it's quite a unique situation. So after we did the Pandion deal, so that gave us a runway to move forward, then we actually put out a new NI 43-101 resource. With that resource, it's a diluted resource. So we've taken a 2 metre intersection across the veined ore bodies with all the internal dilution, and we've added 10%. So I believe Tetra Tech UK is pretty conservative with that, and even if you upgrade to reserve, we've already put the mine factors into it. So you can see there we've got an inferred resource, 1.5 million ounces, 1.52. Most of that is in inferred, because if it's not 25 metre centres, we've pushed it into inferred. So below that you'll see a measured indicated of about 380,000 ounces, and that's all within 25 metre spacings. So with that, we've got 4-year mine life, 90,000 ounces a year. And so a lot of people say, well, why don't we start? And that's the problem. You need to do the work, geology. So at the moment, we're moving ahead with just going on further than that. So we've laid out a drill program, which will go ahead and drill the ore body and put out a new NI 43-101 towards the end of the year, and then put out a new optimised mine plan, and then actually start cleaning it up when the sun comes out next year in April in Finland. So the infill drilling, so it's all about geology, as I say. So you can see all the purple spots are what we're going to infill. It's between 10 and 14,000 metres of drilling. And the two pinky coloured things are the two pits existing, North Pit, South Pit, and that's what's being mined. The ounces reconciliation, the biggest problem was they bulk mined it and was diluted. The last Canadian company there, the Canadian owners or managers that we replaced, they never really got it going. They never did any geology, and they tried to start it up on the back of virtually just trying to save themselves from the debt, and it didn't work. Like we all know with mining, do the work and it works out. If you don't do the work, you die. So we want to get this going. We've got we've got a contractor, we've got 2 drills ready to go, and we're raising $7.5 million to do the drilling program, and that'll give us a firm mine plan, optimized mine plan, so we can move forwards in April, start cleaning the pits up to go back to production at an annualized 2 million tons, 91,000 ounces in July. So road to production, as I said, you look at the financial figures. Obviously, we've got very little capital. We open cut, so we're $1,000 all-in sustaining cost. We've used the gold price of $1,400, but we're not gold price dependent. At that $1,400, we make sort of $40–50 million free cash a year. So it's not a gold price play, it's more a gold mining play. NPV 162 million, IR 235 with a capex of 17.5. And that's mostly all we're doing is geology, good mining. We're going to bring in a Caterpillar, will give us a fleet. We'll own the mine to control this stuff, control it ourselves. As I say, I've been doing it for about 45 years. So we get here, hopefully we know something at last. Process plants, production ready, all the first fills there, fully licensed, ready to go. The big thing is defined mine plan. The 6,666 tons per year, that per day, that allows for missed days of production to annualize at 2 million tons. Working capital, working with Caterpillar, as I talked about, and the startup is we'll start digging up the pits in April 2020, but yeah, first full month will be July. Infrastructure, it's all in place, excuse me, all licensed, and we're lifting the tailings dam, which is nothing untoward. So we'll start that part of this raise money now. We're expanding the waste piles and upgrading the water dam. So those are all just cleaning up, getting ready for the July start. Obviously our share price, which is crazy, we're a 10 million market cap company. And that's mostly because the guys we took over from promised the world to the market and then didn't do any geology and then failed. But what they did prove is the plant runs, it does 87.5% recovery, and it operates. So with that, we tick the box for the plant, the infrastructure, the licensing. So Finland obviously is a very easy place to work, highly educated people. So that part of it's easy. The thing is we need to firm up the pit and the geology. Value scenario, that's quite a busy slide. As I say, we're new management, we're hands-on, we've built plants, we've designed and built gold plants, lead zinc plants. Market capital is only $10 million. We've got a low debt. Capex is low, 17 million for restart. If you look at our annualized production, 91,000 ounces at $1,000. So it's a very profitable operation. And plus, the biggest thing, it died because people didn't do the work. Most of the previous gold produced from the previous miners was actually from all the low-grade open cuts, so they put that through. And that came, the low-grade stockpiles ran at 0.75, and if you look at our reconciliation, that was right. So there's no, when you look at the figures, there's nothing really untoward about the whole project. And all our peers in the market, are sort of 100 million market cap and upwards. The biggest thing is geology. That's all, thank you.